Hello, I'm Kelly O'Byrne and welcome to LCG's preview for the week ahead. I'll be talking about trade war fears, political uncertainty in Europe, UK services PMI and US non-manufacturing figures. Before that though, I'll run down some of the top corporate results to watch for this week. On Monday, it's Games Workshop. They release full year results and Dell Technologies announce quarterly results. On Wednesday, Findel and RPC Group release full year results. On Thursday, Autotrader release full year earnings and Broadcom announces first quarter earnings. Finally, Sears release their quarterly earnings on Friday. Moving on to the economic calendar, it's UK construction PMI and US factory orders on Monday. The Reserve Bank of Australia rate decision on Tuesday, followed by an array of European services PMIs and the US ISM non-manufacturing PMI. On Wednesday, it's Australian first quarter GDP and the US trade balance for April. On Thursday, China releases its foreign reserve stats for May, then it's Eurozone first quarter GDP. On Friday, there is the China trade balance, German industrial production and Canadian unemployment. Now, Jasper is still away, but I'll run through some key market moving events covered by the research team here at LCG. Reignited fears of a trade war have been pulling markets lower across the globe. Trump's announcement of new trade tariffs on its closest allies have led to retaliatory responses from Europe and elsewhere and are expected to influence trading across next week. Further retaliation from affected regions could hit on sentiment, encouraging a risk-off tone to trading. The dollar, which has eased off its recent highs on the back of these fears, could continue to sell off. Investors fear that Fed may hold back on committing to its hiking cycle amid the increasing geopolitical tensions. The Canadian dollar could also come under pressure as the trade tariffs and any retaliatory measures by Canada are likely to hinder any breakthrough on the renegotiations of the NAFTA agreement. Sentiment-linked currencies such as the Japanese yen, the New Zealand dollar and the Australian dollar will also be under the spotlight in the week ahead. Having said that though, any indication that this tariff announcement is just another negotiating tactic by President Trump could see the markets rebound on a relief rally. Fears of a snap election in Italy has had investors fearing an informal referendum on the euro. This has impacted trading on both sides of the Atlantic, but the picture has since improved in Italy with the formation of a coalition government between the two populist parties, and a destabilising snap election has been avoided. Going into the new week, we expect market sentiment to improve surrounding Italy. While European markets, particularly the Italian FTSE MIB, should remain sensitive to these political developments, it does appear that the worst could be over. Political developments in Spain are under the spotlight this week as lawmakers have voted to oust long-serving Prime Minister Mariano Rajoy. After Italy's 3 months without a government, this can only lead to a sense of political drift in Europe. The instability has seen the IBEX trading at a 2-month low, down 3.5% so far this week, with the unfolding political uncertainty expected to continue. Politics aside now, there are a few key data points to look out for. Tuesday's UK Services Purchasing Manager Index will be a useful data point to watch. Data from the UK has been less than encouraging over the past few months, consistently softer than forecast figures, and consequently a more dovish BOE sees the pound dive from 143 6 weeks ago to just shy of 133 at the time of filming. The Bank of England will want to see sure signs that the UK economy is rebounding following bad weather earlier in the year. Growth in the services sector remained subdued in April, but any signs of a rebound in May could bring a rate rise in August from the central bank and therefore help lift the pound up off its recent 6-month low against the dollar. Investors will also be paying close attention to Tuesday's US ISM non-manufacturing figures for May, after the index unexpectedly declined in April to 56.8 against expectations of 58.5. The principal cause for the decline was trade war tensions and the negative impact on businesses. Whilst trade war fears eased then slightly over the course of May as the US engaged in talks with China, the same index is expected to print higher at 57.4. Now, this survey was carried out before the US announced trade tariffs on its allies, but a strong reading could still help lift the dollar. Thank you very much for watching. If you wish to see these videos as soon as they're released, please follow LCG on YouTube and social media.